welcome to Budget 2017, the FII View with me, Tanvir Gill. My guests today on the show to discuss the upcoming budget include Jonathan Schiessl of Ashburton, Alastair Newton, political expert, and Robert Parker of Credit Suisse. Gentlemen, thanks very much for taking out the time to speak with us today. First up, let's start off with the discussion straight off. Jonathan, as an FII, what are your broad expectations from the upcoming budget?
Yeah, so certainly our view, and I guess consensus to a degree, would seem to assume this budget is going to be more of a populist budget than what we've seen in the last couple of years. And I'm not sure the focus will be really on too much from a business perspective. I think that the focus, I guess, after the pain of demonetization that's been felt by certain segments of society in India, I guess this budget will be to a degree aimed at sort of alleviating some of that pain, but also, as you quite rightly say, obviously with the political background of elections, literally 4 or 5 days after after the budget, then clearly, it will be reasonably populist, would be our expectation. I guess the key question is what we don't want to see is massive give-outs. I think that there's certainly lots of things the government can do that will be aimed at the sort of the broader population in India, economy, housing, etc. Many measures that the government can aim at, and I think that will be fairly well received. But as long as clearly from an investor perspective, what we don't want to see is a blowout in the fiscal.
Well, same question for you as well, Alastair. Do you think the budget will be a toss-up between being reformist versus populist? Do you expect there to be a fair amount of overhang of the upcoming state elections in UP on the budget internals?
I think the budget is going to have a consideration of all 5 upcoming state elections. The timing, well, hardly coincidence. And I know the Electoral Commission has given the go-ahead and so on. But I do think there is a really clear implicit, nobody said anything explicitly, linkage here between the currency move, which was enacted back on the 8th of November, the timing of the budget and the timing of the elections. And you put all that together, and I think what we are going to see is a good deal of fiscal largesse in the upcoming budget, which is, again, not explicitly, but at least implicitly, going to be aimed at securing votes for BJP in the upcoming state elections. This is very important to the Modi agenda, after all. It is going to determine if he's going to have more votes in the upper house or not.
Right, Robert, aside of the populist angle to the budget, what is your own view on fiscal management? Most on the street believe that 3.5% on fiscal deficit will be met in FY17. And the road ahead to achieve 3% would be laid out. The FRBM report, of course, has indicated that below 3% is not required for the economy to grow at a healthy pace. So from that point of view, how are you looking at the government's fiscal consolidation plan?
I think it is okay. And, as you correctly say, the consensus is that the budget deficit, this year is going to average, well under 4%, and there is a consensus of around 3.5%. I think both domestic and foreign investors are not expecting a budget with a deficit down towards 3%. I think, what obviously the Indian government would like to do, is to ensure that the growth numbers are maintained, and if one looks, for example, at the last reported growth number, the last quarter, for the third quarter, was 7.3%. For the fourth quarter and the current quarter, we're likely to get numbers less than 7%. So I think if one can, there is no severe pressure on the budget deficit. If we were looking at numbers, going back above 4%, I think investors would be concerned. There is no pressure on the inflation front, where the CPI numbers should be staying well below 5%. I think where there is pressure is this growth disappointment that we had in the last months of last year, and as we started 2017. And I think the focus has got to be on a plan which reboots the very good growth outlook for India, which has had this temporary setback.
Alistair, do you believe that the government has enough fiscal elbow room to come out with a populist budget, or will they have to play the balancing act?
That is a question to which we can't be sure of the answer, because we simply do not know for sure what sort of yield the currency move actually has given the government. But I do expect them to see them trying to balance both those aims. I don't think they want to get into a situation where they're not visibly doing some sort of fiscal constraints to get the deficit down. On the other hand, I do think that they will want to, shall we say, oil the wheels a bit in terms of the upcoming elections. As I said, I think politically they are very important. The BJP has not done particularly well in state elections since the general election, as you know. Tactically, I guess that we could say that sometimes they've got it wrong by weeding out big guns rather than local candidates. It's not clear how big a role in these particular campaigns Mr. Modi is going to play himself. But clearly with a lot of at stake here, they are going to do their best to try to ensure that they get a reasonable return for their candidates in the upcoming elections. You mentioned UP, obviously particularly important in many respects, although I think it's an interesting question, the extent to which UP, which traditionally has been seen as a microcosm for India as a whole, is still representative in that respect today, with much of India modernising a good deal more quickly than UP has done to date.
Right, but Alastair, what can the government do in this budget to gain ground for the upcoming state elections?
Well, I think what we will likely see in the budget, and the details are very unclear, but I think what we are likely to see is some serious efforts to boost consumer spending power, especially among poorer Indians. Now, you will recall, I'm sure, that back 8 or 9 years ago, we saw the then Congress government bringing in the Make Work scheme to boost rural incomes, which served it very well in the general election which followed. I'm not suggesting we're going to see something along those lines this time, but I do think we're going to have a budget which is going to be aimed at boosting consumer spending to help the economy along. I think we may well see some relief for the real estate sector, which is struggling a bit at the moment, perhaps some help with mortgages. Now, clearly that's not going to impact on poorer voters, but it's still going to be very popular with a lot of Indians and help the real estate sector as well. I was reading a report by my former colleague Sonal Varma at Nomura the other day, which has attracted a lot of attention. I do tend to agree with her overall analysis after the ongoing dip in India's GDP because of the currency moves, among other things. I do think we are going to see a recovery in the second half of the year. I think the government is going to be looking to help that on its way through consumer spending, and that there is going to be an electoral angle built in there. Whether that will help them in UP to the extent they need help is a very big question indeed. Let's face it, they are up against some formidable opposition there. Correct me if I'm wrong, but I think that Congress is running Sheila Dixit in UP, and of course she has a very good track record in Delhi and is a very competent politician and a very competent election campaigner. So it's not just about competing against the local parties, it's also possible that we may see some sort of recovery by Congress in UP.
Right, Alastair, but specifically about UP elections, if I were to ask you to stare at a crystal ball and tell us what is your sense of BJP's position in the state and how would the results fare, what would you say?
$64,000 question, eh? I think BJP is going to struggle in Uttar Pradesh, to be honest. I think that you should never underestimate Mawati. One should never underestimate the ability of the local politicians to attract local attention. We shall see. I would like to see BJP do well, not because I'm necessarily a particular fan of everything that BJP stands for, but I still believe very firmly that this Modi administration is currently the best bet for India's economic prospects going forward. And they do, as I said right at the beginning, they do need the votes in the big states to have the sort of firepower in the upper house which patently they need to get important steps through. We are hopefully going to see GST come into force in July, but the constant delays on that since the last general election have been a drag on the Indian economy. I do believe that it is very, very important that BJP rallies some more support for the measures which it has promised to take and on which it has not yet succeeded in delivering because of the difficulties which every government in India faces enacting significant reforms.
Right, Jonathan, the other angle to focus on in this budget will be taxes, especially tax tightening laws for taxation on equities, renegotiation of international tax treaties, whether it's with Mauritius, Singapore, Cyprus, etc., would raise taxation from April 2017 onwards for investors using those routes. Additionally, recent clarifications by the authorities that large investors in foreign portfolios that have 50% plus of their AUM in India may be liable to pay tax on redemption raises the possibility of double taxation. How are you feeling about these potential tax measures, and what kind of clarification would you expect the government to give on these issues?
So I think I can't speak for all foreign investors, but certainly from the way we look at it, I think getting rid of these distortions is absolutely the right thing to do. Clearly, it has been advantageous to route investments into India via these sort of locations, obviously from a capital gains tax perspective. What we'd like to see is a level playing field. For us as an investment company, it doesn't have too much of an impact because we're very much long-term investors, so we don't do too much short-term trading, and therefore we're not currently particularly hit by current taxation rules. But I think absolutely it's the right thing to do for India to have a level playing field and get rid of these distortions.
Jonathan, an additional question on this. The government recently clarified in response to Prime Minister Modi's statements that the tax rate on long-term capital gains will not be changed from the current 0%. But that doesn't prevent the government from changing the definition of long-term capital gains from more than 1 year to now more than 3 years. A similar change was put into effect for debt securities in 2014. What do you hope to hear from the government in this regard?
Yeah, I mean, clearly it was a bit of a surprise for us and most foreign investors when late last month there was the clarification was issued, and yeah, there's been a few weeks of intensive phone calls with tax advisors as well as industry groups to try and get the position of the potential damage that this particular clarification could have, particularly on foreign investment into India. Certainly, from our perspective, we were pleased to see that the Finance Ministry has issued an abeyance on this particular notification. So obviously, it's not going to be an issue for the time being. From our perspective, whilst that's good news, clearly it's not a problem which has gone away. And as we all know, we do get these periods from time to time where this particular issue could crop up again in the future. So whilst the abeyance was good news in the short term, obviously from our perspective, again, it comes back to a level playing field. That's all we're asking for. And obviously some of the rules would have had quite distorting impacts, I think, on quite a few foreign investors. Certainly the 5% rule probably would have meant that big investors into India, if they were going into India funds in the offshore space, would probably have to ultimately go into the very large funds because they wouldn't want to risk being more than 5% of that particular fund. So it would have quite a negative impact on some of the smaller India funds. And I think clearly that wasn't the intended policy. It's always this unintended consequences of sometimes slightly, you might say, irrational taxation policy.
Right, Jonathan, the third angle to taxing investors is tightening tax treaties. GAR comes into force from 1st April onwards. The government moved in May 2016 to tighten the India-Mauritius tax treaty, after which foreign portfolio investors will, over a period of 2 years, end up paying the same short-term capital gains tax of 15% on their investments. Similar changes were made to the tax treaties with Cyprus and Singapore. How much would that be a deterrent for foreign investors such as yourself?
I think I would agree with that. I think at the end of the day, the use of Mauritius and these other entities, and at the end of the day, I think people, paying tax is part of life, unfortunately, these days, and India, GARs and all these other rules and stuff. I think it shouldn't impact the overall longer-term trajectory from an investment perspective. But obviously we just have to keep an eye out on unintended consequences.
Steering away from taxes and talking about the budget's core focus, Robert, what do you hope to hear from the government to boost consumption, which may have seen a bit of a setback because of demonetization, and encourage lending for both retail and corporates? Where do you see the government drawing the balance here?
I think the answer to that is we are likely to probably see some action to help the banks, and I think that we've had discussions in the past about the non-performing loans in the banking system, and I think a clear message that the non-performing loans are, going to be addressed, and that may require some additional capitalization, that may require some government assistance, but certainly a strengthening of the banking sector to increase lending. I think that's highly likely. In terms of consumption, Indian consumption actually has been reasonably robust over the last year or so. Yes, I think in the current low inflation environment, the risk of taking action to boost consumption is reasonably low risk. So I think you could see some steps to boost consumption. Certainly, I think you will see and should see some steps to strengthen the banking system and improve lending.
What about the broad view on the markets, Jonathan? Because since the end of December, we've started off the year on a fairly positive note. We've done about 3.5–4% on the index, perched at about 8,500. Where does the story for the markets, for the indices, go forward from here post the budget? Do you believe that we are on course to reclaiming our previous highs as well as making fresh record highs midway through the year?
If I'm honest, I think I'm being quite surprised about this move, this very short-term move we've seen. Obviously, we're consolidating the last few days. I think there are a lot of global cues that are also pushing money into emerging markets generally. It'll be interesting to see whether, equity markets globally have rallied very strong into this Trump, obviously inaugurates tomorrow, and it'll be interesting to see if it's a sort of a sell the fact moment whereby a lot of the sectors which have done well, the perceived areas of the market which have done well, which are supposed to benefit from Trump's policies, will be interesting to see if there's some profit taking after his actual inauguration. So that could have some influence on India in the very short term. Clearly, he's talking a lot about the dollar as well, about the strength of the dollar. So certainly the IT sector, which has been certainly in the crosshairs certainly more recently and following results, which has been a disappointing sector, that could be quite influenced by events in the States, certainly in the next couple of weeks. Our view was, and certainly probably still remains, that India will actually have a pretty good year from an equity return perspective, but our view was that it would be more second half, sort of back-ended, if you like, this year, mainly down to the fact that, we just don't know, on demonetization. It's mainly speculation at the moment that's swirling around markets, and it's going to take some time longer before we understand the impact that demonetization's had on earnings and growth. So that's why our sort of view originally was it's probably going to be a second half sort of story as opposed to a first half.
And Jonathan, if I were to ask you your top 3 budget bets, stocks where you currently hold a position, and how you believe that there could be more upside to those investments given the policies that may be announced in the upcoming budget?
So we tend not to focus on sort of policy events. We try and be a little bit longer term, but clearly, we do own some cement names which have gone through quite a substantial derating. Yes, they've re-rated a little bit in the last couple of weeks, but clearly most of the cement names out there, the sentiment has changed quite dramatically following demonetization, and certainly if the government does come out with policies that could ultimately push up demand for cement, that could be quite positive for all the names in the sector. So we've held on to cement there. The other areas I think are interesting are some of the banking stocks as well. We reduced some of our banking stocks following demonetization because we were concerned about the impact to margins. And clearly banks were more focused on queues rather than lending. Yes, it's obviously good news for banks, the deposit growth that we've seen, but we're just a little bit concerned that there might be some more negative news coming out around the banks. But that's going to be an interesting area, I think, in the next couple of months as well. Individual stocks, we haven't really traded too much in the last few months. One of the IPOs late last year, which we took part in, was Endurance Technologies, which is certainly very much making auto parts for the two-wheeler space. Not only Royal Enfield, but obviously some of the other more mass market two-wheelers as well. And that stock had come off, and we've been adding to that as well. And we do have very high conviction on that particular counter in the medium to longer term.
Thanks for those ideas, Jonathan. I just want to do a quick round on, what this budget would mean for India's perception among foreign investors. Alastair, I'll start off with you. My specific reason for asking you this question is essentially understanding how foreign investors are viewing the political climate in India under the current government to push forward the reforms that will continue to make India investment friendly for the world.
Well, the first thing to say, of course, is let's always keep in mind that a lot of expectations in the investor community and indeed among Indian voters back when Modi won the election it was clear even at the time, significantly overblown. I think a lot of people underestimated the difficulties which Modi would face to push through his agenda. I think probably Mr. Modi himself underestimated the difficulties he was going to face to push through his agenda. So it's steady as you go, very much. And overall, I think actually investors have coped with this very well. You'll remember too the flurry of excitement last year when it became clear that Dr. Rajan was going to be leaving the RBI. And yet, the RBI is continuing much on the track it was on before. It remains highly respected by the investor community and, in my view, quite rightly. So overall, I think looking at India in isolation from the bigger picture, the global picture, it remains perhaps not as glossy as people had hoped 3 years ago, but certainly in pretty good shape.
Right. And Robert, investors such as yourself, how are you viewing India as a reform story with key bills like bankruptcy code, GST seeing the light of day, demonetization also aiding to clear the black money mess? What does this do for India's perception as the government gets ready to present its third annual budget?
I think it's work in progress. I think that it is good work in progress, but I think all foreign investors are looking for further structural reform. I think key factors are, the very necessary need to improve infrastructure, and that's the energy sector, that's the transport sector. I think where India has good leadership, I come back to my earlier positive comment on the Indian IT sector, and, I think one has to be impressed by, India's progress in the global IT. In terms of structural and legal reform, you mentioned the bankruptcy code. Obviously, legal rights of investors and shareholders is terribly important, and that corporate legal framework is very important as well. So, coming back to your question, what do foreign investors think? I think the answer is it is good progress, but as we all know, there is still a lot of work to be done.
Work in progress, it is indeed. Robert, Jonathan, as well as Alastair, thanks very much for taking out the time to speak with me today. Appreciate your views and thanks very much for outlining your expectations from the upcoming budget. Well, with that, we come to the end of the special edition of Budget 2017, the FII View. Thanks very much for watching the show.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.